All right, boys. Today we got how to properly use inversions and fair value gaps and how to identify the different types of fair value gaps. First things first, I'm gonna tell you to do. Where's indicators? Indicators. Get this fair value gap, Luke's algo indicator. It doesn't make your chart look good. It makes it kind of look like you're not tough and shit. But honestly, this helps me a lot just because bro, I don't really got to spot out inversions. All right, we'll just start with Friday session. All right, we'll go to bar replay. Damn, I'm hungry as a bitch. All right, so first things first, when I go into the 15-minute time frame, I want to see inversions, right? Now that we've identified our draws and liquidity and we know where we want to go for the day, right? On Friday, I wanted to go towards the downside, right? So what identifies as a strong fair value gap versus a weak fair value gap, and what type of inversions do I want to see to take trades? Now, if we go into the 1 hour time frame, we have this 1 hour gap right here, although we did wick below it. So that to me doesn't really matter. Now we have this 15-minute bullish fair value gap that I could potentially see a reversal off of. What a fair value gap is, if you don't know, I should have probably started with that, is let's say suppose you have 3 candles. You have this candle, and these are all up candles. I'm just gonna I don't really care about the color, right? And then you have, wait, I'm tripping. And then you have this candle, and then you have, let's say you have that candle. It's a 3 candle structure, and this would be your value gap from here to here. And if you're in an uptrend, maybe price comes back down into this fair value gap and it reacts off of it. And let's say once you break structure of that candle, you enter right here, put your stops over here and take profit up here, and you bang a trade. Or if you're in a downtrend and this is just a reversal and another candle comes and inverses this fair value gap, which means close below it, then we can take a short towards the downside. So there's 2 different types of fair value gaps, and you could see indicators off of that. And first steps first, you want to find your draws and liquidity. I see lots of draws and liquidity towards the downside, so I want to take these shorts, right? So we have this 15-minute bearish value gap that potentially I could see a rebound into and potentially get a reaction out of towards the downside to allow us to further our bias. We also have this 15-minute bearish bullish fair value gap that I want to see invalidated, maybe, potentially, right? Nope. Smaller one. This 15-minute bullish value gap that since my draws and liquidity are towards the downside, I want to see these get invalidated to take a trade. So we go into the 1 minute time frame, we play it out, market opens. Fuck. So we immediately invalidate within 1 minute of market open, 8:31. We invalidate this 15-minute bullish fair value gap. We're also respecting bearish as we're filling in for value 1 minute bearish for value gaps and reacting downwards off of them. Now we still have this 15-minute bullish for value gap over here that I want to see get invalidated. We get a reaction into a 1 minute gap and then we inverse it. So now what do I see? Although we did inverse this 15-minute bullish for value gap, we filled in this 15-minute bullish for value gap and filled in draws and liquidity and got reactions off of it. So now, rather than so how do I differentiate what really matters here? Because we invalidated a 15-minute bearish value gap, but filled in a bullish value gap, and now we're going towards the upside. So how can I tell if this is just a retracement or if I want to take a trade here? Now, if you really think about it, right? What is the one thing that's the difference between this gap that was here and this gap that was here? Although we did inverse the same time frame, we inversed this gap. The difference is we also swept out these key draws and liquidity, right? So when we see a reaction off these key draws and liquidity with a fill into this gap, I can assume that we're going to go towards the upside. Just based on the fact that we filled in a high time frame gap, we swept out draws and liquidity, and we rushed towards the upside. Now, what am I waiting for? A 1 minute inversion. This tells me that we're not maintaining bear structure anymore. If we were maintaining bear structure, we would have filled this in, got this candle out, and broke structure right here, and then we would have shot towards the downside. That's not what happened. We got an inversion. So now, what do I see? With this inversion and breaking this 1 minute structure right here, I can tell that minimum we're gonna take out this 15-minute bearish value gap. Maybe we could see a faltering reaction off of it towards the downside, but I can tell for sure we will take out this bearish value gap, and if we maintain the structure, we could even go out and take this London high out. So now what do I target? I target the London high. We see, and now we have this 1 minute gap, but we're not worried about this 1 minute gap, because if we have the momentum to take out a 15-minute high time frame bearish value gap, the odds are this 1 minute gap's not going to do anything for us. So first TP's hit. And then we end up getting towards the downside. So the first TP right here would have cashed us out, right? We would have hit TP. Now, maybe the London high is not really amazing or not on our side. So now we could see we swept out a high. So we hit this first trade. We swept out a high, and now we're going towards the downside. We also broke structure over here. What sort of inversion will make me think that we're going to take out these lows? Now, in this perspective, in my eyes, I think we're a little bit too close to these lows for me to even get a validation trade, because these lows are so close to each other that we can really get like a reaction off of any of them. So I wouldn't even trade here unless we came down and took out like further lows. And I don't think that's even going to happen. I don't really know what's going to happen. We're just consolidating, I guess. So we end up taking out the Asia low. Wow, sort of. We invalidated this gap by a little bit, but in my opinion, I do think that we sort of still like held it, I guess, because it didn't like, it just closed a little bit below the gap. So I would still view this as we did get that. We stepped out this Asia low, which was probably our target. And 1 minute inversion, does it happen? It does happen. So now that tells me that maybe we can go further bullish. So what would I really wait for here? If I wanted to play it safe, honestly, since we have all this like consolidation up here, I maybe would wait for the 15-minute bearish value gap to get taken out, or a sudden break of structure. So even if I was right here, we got the break of structure right here, boom. I don't even know if this would be like the most ideal trade, because we're getting an exact 1-to-1, and I would probably put. So the problem with that is, if we already got a reaction off this 15-minute bearish value gap beforehand, right? So if I was to take a trade, I would want to see it get invalidated first. Maybe right here. Nope, maybe right here. Now we're a little bit too close to TP, so I don't even see an ideal trade to take. But you get what I mean. Maybe if I'm like a ultimate risk taker, I can maybe target this 15-minute high up here. But in my eyes, that's a little crazy, since we have high liquidity over here. So from here, I would just be trailing my stops. Maybe below this value gap, and now underneath this low. Just points that we could get rejections off of. Yeah, we would have gotten stopped out at trail stops. So as you can see, maybe this is not the best example to really teach on inversions off of. I could do in the comments, you can let me know if you want to see like another example. But it sort of shows you how we could use high time frame inversions to our advantage, right? Like here we got this inversion with a fill-in of a high time frame gap. Same, we filled in this high time frame gap with another sweep on a draw liquidity. If we're like a really like roadrunner and a risk taker, I would really like try to bottom take this to this 15-minute gap. Again, could have gotten another good trade out of it. So, you know, that's that. I appreciate y'all. Y'all boys have a great one. I'll be back in a market recap tomorrow.